Hey everyone, it's Julie here with TipRanks. Today we're taking a look at a few top analyst energy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we've narrowed in on a few energy stocks that have recently picked up ratings from 5-star analysts. And not just these top analysts weighing in, but they also come in with a strong buy rating overall. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. Of course, we found these under the top analyst stocks page. Found right under the top of the Ideas tab, this is where you'll find a collection of stocks that have picked up ratings from some of Wall Street's very best. For today, we narrowed it down to the energy sector and a medium to mega market cap. You can check this tool out for yourself over on the TipRanks website or right on the TipRanks mobile app. Links to download are in the description down below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into these three strong buy energy stocks. First up, we're taking a look at Expand Energy. They trade under the ticker EXE, currently priced at $114. Over the past year, they have gained 23%, and in the last 3 months are up 6%, and they do currently score a 10 out of 10 on the TipRanks Smart Score. Formed through the merger of EQT Corporation and Equitrans Midstream, Expand Energy is a U.S.-based company focused on natural gas production and midstream operations, primarily in the Appalachian Basin. They are one of the largest natural gas producers in the U.S., focused on responsibly developing an abundant supply of natural gas, oil, and natural gas liquids to expand energy access for all. Their high-quality, large-scale assets are concentrated across 1.8 million net acres in the Appalachian and Haynesville basins. They shared their latest quarterly report just a couple of weeks ago, where they did have mixed results with an earnings beat but revenue miss. The company did see that they see minimal near-term tariff impacts. And there were plenty of other highlights during the quarter as well, such as the company joining the S&P 500 index, as well as strong cash flow and capital returns, returning about $3.7 billion to investors. They said despite the market facing volatility and potential cost increases due to tariffs, they're well placed with a solid hedging strategy and record operational performance. Just a couple days ago, we did have a 5-star analyst from Piper Sandler upgrade their rating on the stock to a buy and increase their price target. They said that they continue to see Expand Energy as best positioned to take advantage of improving demand driven by increasing LNG export capacity in the Gulf Coast. With 21 current analyst ratings, Expand Energy does come in as a strong buy with 18 buys and 3 holds. The average price target of $125 implies an upside potential of about 10%. Looking at those ratings down below, our price targets range from a slight downside of 2% to a high-end price target of over 23% upside. For our second stock, we're taking a look at Coterra Energy. They trade under the ticker CTRA, currently priced at $24.53. They are in the red overall this past year, down 11%, and in the last 3 months, down the same. Coterra is a U.S.-based independent energy company based out of Houston. They're focused on the exploration, development, and production of oil, natural gas, and natural gas liquids. They operate in some of the most prolific basins in the U.S., with a diversified portfolio that balances oil and gas production. They shared their Q1 earnings report on May 5th, and they did fall just short of analysts' expectations, though the quarter did have some other highlights. Earnings per share of 80 cents fell 1 cent short of analysts' expectations, and revenue of $1.9 billion missed by $90 million. But they did deliver oil production near the high end of their guidance, and natural gas production exceeded the high end. The company had strong financial performance and successfully closed the Franklin Mountain and Avant acquisitions. A 5-star analyst from Mizuho Securities recently reiterated their buy rating and said Coterra is on their top picks list. The analyst noted that they were lowering their oil price outlook, but raising their U.S. natural gas price forecast over the same period by 15%, saying structural undersupply continues. They also see improved U.S. refining fundamentals as the inventory outlook remains tight and oil prices weaken, potentially lifting refining margins. The Coterra stock has 20 current analyst ratings, breaking down to 17 buys and 3 holds. The average price target of $33 implies an upside of about 37%, Looking at those price targets down below, we can see several 5-star analysts recently weighing in. All of our price targets pretty much in those double-digit upsides, ranging from 26% up to 46%. If you've made it all the way to our third stock today, then this is a friendly reminder to make sure you've hit that thumbs up button. Last but not least, we're taking a look at Cheniere Energy. Trading under the ticker LNG, they're currently priced at $235, having climbed 47% this past year, gaining about 8% in the last 3 months. I'm feeling a little repetitive here, guys. Cheniere Energy is another Texas-based energy company. They are more focused on liquefied natural gas and are the largest producer in the United States and the second largest producer globally. Founded back in 1983, Cheniere was initially focused on oil and gas exploration, but shifted in the early 2000s to LNG infrastructure, becoming the first U.S. company to export LNG in 2016. They now own and operate 2 major LNG liquefaction and export facilities on the U.S. Gulf Coast. Their latest earnings report came out on May 8th. They did miss on earnings, but beat on revenue and reaffirmed their full-year outlook. Earnings per share of $1.57 did fall over $1 short of estimates, but revenue of $5.44 billion did exceed by $490 million and grew 28% year over year. The company had record LNG export and operational milestones and deployed over $1.3 billion towards shareholders' returns, balance sheet management, and disciplined growth. Last week, an analyst from TD Cowen reiterated that Cheniere was one of their top picks, noting that they upgraded their Stage 3 startup schedule, reiterated fiscal 2025 EBITDA, and accelerated their repurchases in April given equity decline. Another analyst recently increased their price target, saying that they see the ongoing volatility in equities as a disconnect between estimated intrinsic value and the current trading price of the underlying cash flow, especially for names with significant exposure to the Permian. With 16 current analyst ratings, Cheniere Energy does come in as a strong buy with 15 buys and 1 hold. And the average price target of $261 implies an upside potential of 11%. Looking at those ratings down below, we can see several analysts have bumped up those price targets recently. They range from an upside of about 6% up to 19.5%. So that is a quick look at 3 top analyst energy stocks, all coming in with a strong buy consensus. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you always stick to your own plan and do your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.